Hello traders, hello everyone, welcome to my new video after 2 weeks or so. Finally I'm back. I was, as you know, maybe some of you know that I was in a hospital. I had some knee surgery, but now recovering. It's getting better. A lot of exercises in the morning and through the day, but I will be fine and ready for sports in a few months. So what about the charts and markets? Well, I haven't been around much when stocks came to the downside, but looks like that this current sell-off is just the beginning of at least lower prices, deeper pullback that can be structured by three waves. So I still see room for much more weakness, but ideally after a higher pullback. Now at the same time, what we see is actually that crude oil obviously is also turning to the downside. And what is interesting is that crude oil was one of the first markets that actually turned lower in the last 2 weeks. So here is actually this correlation between crude oil in black and you have the S&P 500 in blue, and you can see that here on crude oil we have seen a top 1 week or so before the S&P 500 also turned lower. Also, if you take a look at this, why this is actually very interesting is because back at the start of this year, I've been also looking for this type of correlation of developments when the crude oil actually found the peak 2 weeks or so before the S&P 500 also turned to the downside. And since a drop in crude oil was very aggressive from the top, obviously it's not surprised that this led to some kind of a risk-off environment. And looking at the wave structure itself, I still think that crude oil longer term is headed higher, and that we are now only in a corrective setback. After all, you have very nice and strong recovery here from April, and now we are facing a pullback. This pullback ideally will be structured by three waves, A, B, C move. So the support zone that I would look for is around, the first one is at 34.60, the second is around $30 per barrel. Also, whenever I'm looking for pullbacks and fib retracements, I want to see for a healthy retracement, I want to see a pullback back towards 38.2%, and this is around $30 per barrel. So this can be quite interesting level for sure, but obviously there is always a chance that if the pattern will be completed in three waves above that level, obviously wave 2 or wave B can be finished much earlier. But for now, if we look at the 4-hour chart, clearly we have a very strong breakdown here, clearly an impulsive move. So watch out for potential rally in the next few days, and then another sell-off after a wave B rise. The $40 per barrel is definitely very important and quite nice psychological first psychological resistance here if we get a bounce from the near-term levels. Also, now let's take a look on the S&P 500. Now S&P 500 is making an aggressive reversal here, breaking this trend line support. So from an Elliott wave perspective, I definitely will look for minimum expectations, and that would be a free wave sell-off. Okay, so for now I don't see any free waves down yet. I see only wave A, and also this was a broken channel, so clearly the trend is changing somehow. But as I said, can be only a temporary weakness, but still it should look for more weakness after wave B rise. Now in some cases you will see that this same trend line that was broken here can be retested as a resistance for wave B, and then you see a sell-off. That would be obviously the perfect scenario. So when this market goes a little bit lower after a bounce, I think that crude oil definitely could easily reach lower prices. At the same time, commodity currencies could weaken, and US dollar will strengthen. Japanese yen could also will also be expected to rise. So watch out for dollar yen pair to see what's going on there when the stock market is selling off, because you will have an idea which one is the stronger or weaker, whatever, whenever you want to maybe trade dollar pairs or maybe rather Japanese yen against the majors. So now when we have some kind of a view that risk off could potentially resume lower after a pullback, it's worth to look at some of the currencies that are very weak. I said that commodity currencies will most likely move even lower, but Mexican peso, for example, is doing quite well. Canadian dollar also is not that weak. Aussie is much weaker, and also if you will look at dollar NOK, you will see there that you will have quite interesting reversal as well. So if you take a look at dollar NOK here, I have it down there, you can see quite nice aggressive reversal from the lows. It's definitely not the same thing when compared to, let's say, here to dollar CAD, for example. Let me switch to the 4-hour chart here. So you have dollar CAD here, and look the difference between these bounces here. So to me, I mean, it definitely looks that NOK is much weaker than CAD. Sorry. So I'm thinking that because of crude oil, obviously Canadian dollar as well as NOK could be sent even lower, but I think the dollar NOK has much better structure. Of course, watch out for this ABC retracement. This trend line could be very nice, maybe in a potential new bounce to the upside. Now looking at the big picture of dollar NOK, here is this daily chart. Not only that we are breaking here above this trend line on the 4-hour chart, in fact we are also breaking above this Elliott wave channel here when counting 5 waves down from these March highs. So maybe we are in a reversal mode here. We could be now in the early stages of wave A, and you will see higher degree pullback. So as long as crude oil is weakening, as long stocks are below the trend line, bullish channel, out of that bullish channel, I think that dollar could be sent much higher, and especially against this currency. So traders, thank you very much for your attention. I hope that you enjoyed this video, and I will make sure to catch you with new updates soon. Bye.